The top business stories, live from the Sky Newsroom. The chips are down. Donald Trump warns America's AI industry that low-cost Chinese rival DeepSeek is a wake-up call for the United States. Tech stocks tumble as Nvidia loses $465 billion. We'll see if the markets are steadying this morning. Plus, we'll be explaining why a boom in first-time buyers is happening in London from the chief executive of Foxtons. Very good morning on this Tuesday, Business Live, with me, Darren McCaffrey. Well, what a hell of a day it was yesterday. OpenAI's chief executive this morning calling it impressive. Nvidia's boss, excellent. But Donald Trump has warned that the emergence of the Chinese startup DeepSeek, which claims to have a technological advantage over its US rivals, should be a wake-up call for American AI firms. Its release yesterday caused turmoil on the markets, with concerns in the US that it could undermine the $500 billion investment by OpenAI, Oracle and SoftBank into Stargate, which was announced by the White House only last week. We'll check in on the market shortly, but first a look at some of the casualties of yesterday's tech sell-off. The Nasdaq chip darling, Nvidia, lost $465 billion in one day yesterday. That is the single biggest market cap loss of all time. Meanwhile, the Dutch AI infrastructure giant ASML had $287.4 billion wiped off its value. And Siemens Energy, which has focused a lot on its strategy of supplying power to data centres, shed 19%. Well, let's try and make sense of all of this with Andrew Grill. He's former managing partner at IBM and author of Digitally Curious, your guide to navigating the future of AI and all things tech. Andrew, very good morning to you. Let's start at the beginning here. What is DeepSeek and why has it caused so much disruption?
It's caused so much disruption because people didn't see it coming. I hadn't heard of it till last week. I've just come off stage in front of 50 people and I did a show of hands. Everyone's heard about it, but last week they hadn't heard about it. They've done less with more. They were limited. They couldn't have access to the latest and greatest chips because of export controls. They've done what innovators do. They basically do less with more. What they've proven is they're able to do something on par with the US AI tools with less equipment in different ways. So I think what we're going to see is a lot more innovation, and what we're seeing overnight has been a correction.
And that's fascinating, isn't it? Because the reason people are concerned is that some of these big companies have been spending tens, hundreds of billions of dollars trying to advance AI, and actually this company has shown that it can be done a hell of a lot more cheaply. And so the big question is this morning, why can't US firms do this too?
I think they can. I think if I was inside Meta or OpenAI, they're probably yelling, we are doing this. We actually haven't released it yet. Sam Altman came out overnight saying he's going to bring forward some of his product releases. I think in the next couple of weeks, you're going to see things that are very similar. But also because AI innovation is happening so quickly, the companies that are looking deep inside, remember this is open source. All the ways that they've done this are now published. I think you're going to see a very quick catch up. But ultimately, it means that consumers win because the models get faster, better, and importantly, more efficient.
Talk to me about energy, if you like, power here, because, again, my understanding was that actually the more advanced these AI systems get, the more power they require, and that's going to have big impacts for the cost of them maybe, but also for the capacity of the energy industry. Is that now also in question?
I'm not saying it's in question, but people don't realise that to do a normal query might cost X in computing power. A generative AI query can be between 100 and 1,000 times, so it is computationally quite expensive. But what I think we've seen is that a small company in China can actually do something that is more efficient. So if you like, some of the big companies have had a gold-plated shovel. They've had gold-plated chips, and they've had the experience of being able to use the best and the fastest. What they haven't done is, what could I do if I had less, if I was being more efficient? So I think people out there that want to see efficiencies from AI models are going to be pleased because now the focus will be, can you do less with more because someone else can?
And talk to me about China, if you like. There was a feeling up until about a week ago that actually the United States was reasonably comfortably ahead when it came to developing artificial intelligence. And again, I think as we heard from Donald Trump, that this is a bit of a wake-up call. Do you agree with that?
Well, I've heard people call it the Sputnik moment, where Russia won the space race because they got a satellite in the air. But look what happened next. The US then raced. They poured a lot more investment in there, and they got someone on the moon by the end of the decade, as what RFK said that they would do, or JFK rather. So I think what we're going to see is, yes, it's a wake-up call. There's a correction. People didn't realise that it was possible to do this in a different way. But as I said before, I think in the next month we're going to see models that will actually be on par with what the Chinese have done in the way that they're doing it, and everyone wins.
Now, Andrew, as you've rightly pointed out, I'd never heard of this company until literally last week. And isn't this a reminder, as you've rightly pointed out, AI is developing so fast that even big companies that we kind of think have been around for a while can be threatened by startups so quickly. This movement of capital, almost the race of capital to follow who they think is up and down, could only possibly get quicker in the future.
Yeah, we've seen 10 years of innovation in just 2. November 2022, ChatGPT 3.5 came on stream. Everyone heard about OpenAI for the first time, and we've spent the last 2 or so years really looking at what they've done and putting them on a pedestal. But while they've been focusing on products that are solving certain problems, we've got other companies. Some will come out of the woodwork we haven't heard of. You haven't heard the last of the Chinese AI companies as well. You'll see companies in Europe, in other parts of the world. I think we're going to start to see people saying, hey, I can do that too. We weren't quite ready to show someone just yet, but now we are.
OK, and Andrew, just very finally, you touched upon it there. You know, lots of people out there watching this programme will not have invested in big tech companies, though obviously, you know, the stock market does have an impact. Talk to me about the technology itself in terms of how you, I, and everyone else watching this are going to interact with it. Your argument is that actually what has happened in China is good for all of it. It's good for consumers, even with those concerns around some of the limitations, political limitations, it must be said, that there are on Chinese tech.
Well, I think the broad thing is that people haven't tried it. I asked a question in my session this morning, how many people have used ChatGPT? All the hands went up. How many people use it every day? Most hands went down. People haven't used it. I asked for a show of hands of who's actually used DeepSeek. 3 hands went up out of 50. I spent some time yesterday playing with it. I put different models, asking a physics question into OpenAI's model. Took 23 seconds to solve it. I put the same question into DeepSeek. It took 6 seconds. So only by playing with it, only by being digitally curious, are you going to understand the tech and then understand what it means for you and also what it means for your industry and your company.
OK, Andrew, great stuff. Really insightful this morning in what is a very complex but important issue. Andrew Grill there, who is the author of Digitally Curious, your guide to navigating the future of AI and all things tech. Thank you. Well, let's have a look at those markets in a bit more detail now. And the S&P 500 futures are actually slightly higher this morning. They're actually even. They were a little bit following yesterday's sell-off. We know that Nvidia added more than 1% after hours trading, as well as Broadcom and Oracle, who also had shed billions yesterday. Despite DeepSeek being a Chinese startup, Asia markets didn't really see much of a rally this morning. Here in Europe, the markets are rebounding well, a sea of blue there. As analysts point out, that DeepSeek's emergence may benefit European tech stocks in the long term. Here in London, the FTSE is also doing well, protected from yesterday's sell-off due to a lack of tech companies actually being based in London, which is a bit of a double-edged sword if we're quite frank about it. When it comes to the currencies, the dollar is doing pretty well against sterling today. Sterling down at 124. It is also down against the euro. Well, let's bring in Janet Mui, head of market analyst at RBC Brewin Dolphin. Very good morning to you, Janet. Let's just set yesterday in a little bit of context, i.e. historic.
Yes, hi, thanks for having me. Yes, yesterday's sell-off, particularly in semiconductor stock, is really historic. I mean, 600 billion worth of market cap is wiped off NVIDIA, which is the leading AI beneficiary. So I guess the context of yesterday's sell-off is that actually it is not a broad-based sell-off if you look at the whole market. So actually within the S&P 500, right, 70% of the stocks were actually up, particularly for consumer staples and financial sector stocks. So the ones that took the hit was, of course, the semiconductor sector and also AI beneficiaries such as industrials, data centers, utilities related stocks. So it is not a broad-based sell-off. It is not a systemic matter, but really very confined to AIs.
Janet, just explain to us particularly why this impacted NVIDIA, why that massive sell-off. What are investors concerned about?
Yes, I think the major threat is that, I mean, the whole AI bullish case is based on a lot of spending on AI infrastructure, which benefits stocks like NVIDIA and other infrastructure providers, utility providers, data center. So if there is a Chinese startup that actually would be able to do all this training, have a better model for a fraction of the cost, then you got to question whether you really need those billions of dollars of investment. And that would directly hit semiconductor infrastructure, AI providers' revenues potentially in the future. So I think there's a lot of uncertainty on that. There's also a bullish case, as in if these cheaper models allow for more adoption for the public, more popularization of the AI, then actually theoretically it should help these semiconductor companies, because you ultimately you still need the infrastructure, you still need the computing power, but people are just worried about the margins of these companies, and there's just a lot of uncertainty.
Do you think that if you're a Western investor and you've been thinking a lot, or you've been spending money on lots of these United States tech firms, that actually you might now start to look at China and see where the opportunities are there?
Yes, I think that's the problem. I think for a lot of investors, I mean, the AI theme is very attractive, and primarily you access it in the US equity market. But the problem is that the valuations are very high, and when valuations are high, you're prone to vulnerabilities, like what happened yesterday when there are some triggers. I think for diversification purposes, I think maybe some investors will start to look more into China tech, AI, for example, but it is fundamentally quite difficult to invest in that theme domestically in China. For example, what happened here is a Chinese startup that is not listed, right? Potentially it could spill over to benefit the big tech companies in China, but I think overseas investors remain cautious on, say, the regulatory controls in China and whether private investors will ultimately benefit.
And just verifying it, Janet, you talked a little earlier there about the fact there obviously have been losers, but there have been some winners too. This wasn't right across the board. Do you then just view this essentially as a sensible correction, that the stocks were simply way too highly valued?
Yeah, I think to some investors, it is actually a healthy correction, given that many of investors are bullish on the AI theme, but they're worried about the valuations. I think it is a wake-up call for the sector, as in this episode is actually going to improve competition, improve innovation, a wake-up call for the US tech company that, you cannot take it for granted that you're the leader in the industry and you can't have this supernormal profit forever. So it will drive further innovation, which hopefully will drive better strategy and direction, and eventually self-fulfilling, improving the profits and revenues of these companies.
Okay, Janet, always a pleasure. Thank you very much on what has been a wild ride for the market in the last day or so. That's Janet Murray there. Thank you. Now, let's have a look at what it means for us here in the UK, because while those US tech stocks were tumbling yesterday, the government here in Britain was reviving plans for a UK rival to Silicon Valley. The Science Secretary, Peter Kyle, announced that he wants to double the economic output of the so-called Oxford-Cambridge arc to boost scientific research and development. Well, let's speak to Andy Williams. He's chair of that Oxford-Cambridge Supercluster board. Very good morning to you, Andy. Just explain what it is to those at home who might be unfamiliar with what this ARC is all about.
Well, thanks, Darren. I think I'd start with what the government's already done or committed to in the budget, which they've hidden under a bushel to some extent. So Oxford and Cambridge, as the flow cries, 66 miles apart. But to get from Oxford to Cambridge, you have to go via London. takes you about 2.5 hours, which is ridiculous. So the government in the last budget recommitted themselves to what's called East-West Rail, which is the link between Oxford and Cambridge, that enables those two great universities, global universities, to be joined together with a very fast-growing city in the middle, Milton Keynes, and it creates a population of around 3.5 million, which would allow the wider cluster to compete on a global stage. So that's the message we're telling government, that's the message the government are feeding back to us. We just need to move to that next stage now of how do we now partner with government to ensure the businesses and the investors and the universities benefit fully from the East-West Rail decisions that have been made.
And Andy, the underlying thought process here is that clusters are good. It's the reason cities work. The kind of capital accrues capital, technology accrues technology, and people who are great in their field want to work alongside other people that are great in their field, and that we have got two of the best universities in the world, as you say, not that far apart, but very badly connected.
And that's right. So the technical word is agglomeration. Agglomeration brings businesses together so they can work together. The challenge for both Oxford and Cambridge is they're relatively small cities and their travel to work areas are very small. So by joining them up through East-West Rail, you don't only just improve on the agglomeration, you provide much more opportunities for those communities in between, sort of Bedfords and Milton Keynes, all the bits between, and actually beyond both Oxford and Cambridge benefit as well. So it's bringing a much wider footprint so that a wider area, in fact, the whole of the UK can benefit as a consequence of the innovation that comes out of those global universities.
I'm glad you used the word agglomeration and not me. Let's talk about the Labour Party, though, because we know this scheme was kind of dropped, wasn't it, by Boris Johnson? Labour now seemingly committed to it. Is that your expectation that Labour are going to pump money in to make this happen?
Well, like I say, I think they've already pumped the money in. The completion of East-West Rail will cost many billions of pounds, and it's really down to that collective of government working with business to ensure we maximise the benefits of that.
But Andy, but what I was trying to get at there, though, is this is not just a railway line. This is also about talking about building hundreds of thousands of new homes, a lot of infrastructure alongside that too.
There will be a lot of infrastructure alongside that. And actually, you talk about homes, I talk about schools and hospitals. I think it's usually the social infrastructure which makes the communities concerned about this sort of level of growth. So it will require further investment. Some of that will come from the public sector. A lot of it will come from the private sector. They're really chomping at the bit to get going across this region. And that's what the government's helping us to enable.
Andy, just finally on this, clearly we have got great universities here. We are, let's be frank about this, slightly behind the curve when it comes to some tech. We've just seen this big battle play out between US tech firms and Chinese tech firms. Where does the UK fit into that? Do we have a niche that we can genuinely exploit that means that, it's not just that the Cambridge-Oxford arc is viable, but actually as a world leader in the decades to come?
Well, I think that's the vision. One of the things we have to play smart. So we'll have to work on particular niche areas, just like you said. I think for the first time, bringing those two great universities together will create knowledge-intensive opportunities that otherwise wouldn't exist. The other thing we did sort out is the funding. So VC funding's reasonably good in the UK, but that follow-on scale-up funding is where we fail. So we're very good at creating unicorns. That's the £1 billion to £2 billion companies. Pretty rubbish at translating those into the £10 billion companies. The only example that comes to mind is a company like Arm. So that's what we need to do. If we can release additional funds so we can nurture those unicorns with those niche opportunities, then we can grow those companies of the future to compete with the Googles, Facebooks and the like.
OK, Andy, really appreciate your time this morning. Andy Williams there, chair of the Oxford-Cambridge Supercluster board. And this is all leading up to a keynote speech by Rachel Reeves, the Chancellor, tomorrow on growth and the economy. We will have full coverage here on Sky News. For the meantime, though, you're watching Business Live. Up next, a boom in first-time buyers in London, just as rental prices drop elsewhere. We'll be speaking to the chief executive of Foxtons. Stay tuned.
I'm Katie Spencer and I'm Sky News' arts and entertainment correspondent.
Maverick here on the red carpet. I'm so excited, Tom Cruise.
Katie Spencer, Sky News in London.
Welcome to the world.
Our new podcast, starting now. It's very exciting. Every week, we'll be reporting from the world's trouble spots.
We get to hold those in positions of power accountable, and we get to ask the questions that the audience, the listeners, want to know about.
And that's why it is so important that people tune in, come along for the road, come along for the journey. It'll be fun.
I'm Siobhan Robbins, Sky's Europe correspondent based here in Berlin.
In Sweden, police have seized a lethal stash.
Anyone of any age could say, I'll do that for £1 million and then have to go and shoot someone.
Yes. Sky News, the full story first. I'm Greg Milam and I'm Sky's Chief North of England correspondent.
This is insane. This was a bustling residential area.
I'm Yusra Al-Bagher, Sky's Africa correspondent based in Johannesburg, South Africa.
How difficult is this to police tonight? Off the scale.
I'm Dan Whitehead, Sky News' West of England and Wales correspondent.
Play Sky News.
From the Sky News Centre at 7.
Now that you're up to date, we can go into a bit more detail.
Things can change incredibly quickly.
Taken by surprise.
Have you ever known a moment like this in British politics before? Yes. Cheers.
We'll start with breaking news.
Let's get the latest on the ground.
So, by the end, we'll hopefully all understand what's going on in the world just that little better.
Mandatory evacuation, you must leave!
For many people, Harvey is far from over. People here believe the water will be this deep for weeks. I'm Greg Milam and I'm Sky's Chief North of England correspondent.
Are you trying to run me over, Sir Philip?
No, go away.
Look like it, sir. Will you respond to those who made accusations, Sir Philip?
Can you go away?
Sky News, the full story first.
I just took a shower above the clouds. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
Very welcome back. Now, the London-based estate agents Foxton says that first-time buyers are flocking back to the capital ahead of the March stamp duty deadline. That follows a surge in lettings too, saw the company's annual operating profits jump some 33% to £19 million last year. Well, let's speak to Guy Gittins, who is the Foxton's chief executive. Guy, very good morning to you. So, you guys have had a pretty good year. What's driven it?
We've had a great year. We're now 2.5 years into our rebuild plan for Foxton since I returned to the business in 2022. And I have to say, we're starting now to see some of those gains starting to really pay off. We've focused very much on growing our headcount, delivering lots of training across the business. We've also been rebuilding our competitive advantages in things like marketing and our unique proprietary data set. And all of that now is starting to really yield results. And a big part of that driver, of course, was a 30% increase in our sales revenue. And bearing in mind, last year, of course, that wasn't really implemented or affected by the increase in the reduction in that stamp duty holiday. So we're pleased with the results. It shows continued progress against our plan.
And so it is part of the success for you've just had because, particularly at the back end of last year, people are rushing to particularly first-time buyers, obviously, to buy homes ahead of changes to stamp duty in March.
I think that stamp duty holiday will impact the first half of this year's trading,
Okay.
but actually the stamp duty holiday was only announced as coming to an end 2 months before the end of the year. So that rush really didn't start to materialise in actual physical revenue. But we did see that there was an increase in the number of potential buyers looking to transact, and that has flowed into the start of 2025. But certainly last year's increase in numbers was a big part thanks to our growth in market share. there. We grew at the fastest rate of any London estate agency a few years ago, and that really now is starting to translate and pull through as revenue.
In saying that, we do seem to have more stock coming online in the sense that it's not happened in London yet, but rental prices in the rest of the country have fallen, I think, for the first time since before the pandemic.
That's correct. Actually, this time last year, we predicted that the London market would probably be flat across the whole of 2024, and that was exactly right. We see exactly the same sentiment at the start of this year. Looking at the supply and demand situation, there's always huge demand across London. As London's largest lettings agent, we actually register nearly 600,000 tenants each year, and those tenants are fighting for a very small amount of stock. And today, we open the year with a slightly larger number of available properties than we saw this time last year, but that volume of appetite for tenants running across the year will mean that we don't expect to see any price increases this year.
Interesting. So we are having, maybe a few more homes than we have had in the past. And I suppose my final question here, Guy, is how do you find that in a reflection of the wider economy? Normally, a buoyant housing market is a good sign, but we're potentially in a recession. We may be in a recession, we don't know. The economy's at least been pretty flat. What's your sense about where we are in terms of the wider economy and how housing feeds into that?
Well, we start the year very optimistic about the year ahead. Certainly, if we compare back to 2023, when the market was really probably at its lowest volume numbers in anybody's memory, down for London, that was 80,000 transactions. Last year, we saw somewhere in the region of about 85,000 transactions, so a little bit of an improvement. And we expect this year somewhere between 85 to 90,000 transactions, but that's still well below a 5-year average of 100,000. So each year we seem to be getting a little bit better in terms of sales volumes, although sales values we expect to be flat in line with lettings values as well. And the resilience of the lettings market is really underpinned by this huge volume of people wanting to try to live and work in the capital, surrounded by a very small amount of stock. So ultimately, we're very positive, and I think, of course, property across the whole of the UK is a very, very important driver of the economy. But we start this year with some good optimism behind us.
OK, Guy, appreciate your time this morning. Guy Gittins there from Foxtons. Thank you very much indeed. OK, that is it for me on Business Live for this morning. We're back, of course, with the afternoon edition at 4:30. Do join me then if you can. Up next, though, it is James Ecker with the very latest news at the top of the hour, including that interview Dominic Waghorn had with the Iranian foreign minister, and also a look at population predicted to grow by nearly 5 million in the next decade or so. Stay tuned for that at the top of the hour midday. I'll see you this afternoon at 4:30. Goodbye.